Welcome to MGAA Conversations, our new podcast channel where we'll be discussing with an exciting number of guests all things related and topical within the ever-growing MGA community. Welcome to the latest episode of MGAA Conversations. I'm Mike Keating and I'm delighted today to welcome Kevin Donoghue, Managing Director of Mystic Capital Advisors. Kevin, a very good afternoon to you, although where you are in the US, it may well be the morning.
Thanks, Michael. Great to join you. Yeah, it's 10 o'clock in the morning here.
And just share with our listeners exactly where you are at this moment in time.
I'm outside New York City in New Jersey.
And the weather, is it as muggy and sticky as it is in London today?
It's not as muggy as it's been the last few days. It's got a little breeze out there today, so it's nice.
Okay, fantastic. Okay, so let's get straight into it, and I know our listeners will be very interested. So I think the first off the bat, really, Kevin, is to please share with our listeners, a bit of insight into what Mystic Capital do and, what services you provide.
Mystic Capital, we started Mystic Capital in October of 2001. We focus 100% on the insurance industry, and our centric goal is mergers and acquisitions and affiliated services, which include both capital raising and succession planning for principals.
Okay, and on that theme, I know you operate successfully in a few markets. I think without doubt, our listeners will be very interested in your perspective on, current M&A activity, certainly in the US. As you know, recently we had at our conference, Powell Brown do a keynote speak around, sort of the US sort of perception from that bit. And just sort of, just to share sort of, your current view on M&A, both in US, the UK and other markets, both now and in the future.
Sure. Just before I get into that, I do want to congratulate you on that annual conference in last month. I thought it was terrific. Really great job.
Much appreciated.
And I thought it was much better than the year before, and the year before was good as well. So it's just a continuing improvement. Good, nice job, Mike.
That's very kind of you, and I'll share that with my team because they do all the work.
But as far as the M&A environment, so we focus on the U.S. and London, and the two markets have been somewhat consistently active. The U.S. last year and probably the past 18 months has been a bit of a slower pace of M&A activity than, say, the previous 36 months going into that, and that is a function of rising interest rates. But with the interest rate environment here and in London, with the Bank of England lowering rates yesterday, M&A activity has started to pick up again. More deals are getting done. There's more focus on a controlled interest rate environment versus where are rates going? Are they going up, going down? Whenever that happens, people kind of tend to slow down M&A activity. But now it's a little bit more controlled, a little bit more predictable. So I would expect over the next 18 months, M&A activity will continue to pick up both in London and in the U.S. And we're seeing that deal activity right now.
And do you see any bias to that the composition of those deals, Kevin? Is that in the broker market, is in the MGA market, even the insurer/reinsurer market? Are you seeing any particular drive across those particular segments?
Yeah, so there's if we break down the, say, 5 markets, we focus in on the insurance. The risk-bearing side is somewhat steady. It's been a steady M&A environment. Balance sheets can be tricky to acquire, so it generally doesn't move quickly. But on the other 4 pieces, one, the market intermediaries, which we consider MGAs, MGUs, wholesale brokers, and program administrators, that's picking up. There's a lot of private equity capital, both in London and the U.S., with dry powder, and they love transactional intermediaries, predictable income streams. Same with Lloyd's brokers, same with classic direct-to-insured retail brokers. And what we're seeing also in this space is on risk management and loss control consultants. There's a lot more activity in acquiring those as well. So that's another interesting activity base within the insurance marketplace.
And that's an interesting point. So just pivoting back on your last point in terms of that risk management side thing, are you seeing the activity on that as bolt-ons to sort of already existing underwriting platforms, or So they see that as sort of, I suppose the description, I would say, building a hotel where you've got everything in the hotel, and they see that risk management as part of that sort of product and services. Would that be fair?
Yeah, that's a good analogy. Yep. As well as there's a few insurance service firms that are specifically staying out of the say intermediary roles and focusing 100% on loss control, risk management, and ancillary services, including captive managers.
Okay, that's interesting. And just again, staying on that, your expertise and insight into those sort of segments. So I talked to a number of members who are quite active in sort of M&A, both in the broker space, and they do sort of challenge. Well, they do share how challenging they find, you know, acquiring MGAs as opposed to brokers, purely by the nature of the underwriting due diligence. Do you have an observation on that? I think it's obviously quite obvious where it's different buying an MGA underwriting platform in terms of a sort of intermediary or broker. But in your experience, have you sort of found ways of assisting on MGA, MGU sort of acquisitions because of the general nature?
Yes, so we have a group, two teams, one in North Carolina and one in Colorado, who focus on due diligence. So when they have an MGA or MGU program administrator, the key, as you know, Mike, is not necessarily the profitability of the company; it's the profitability of the underwriting risks.
Yeah.
Are they making money for their carriers? And that's equally as important at that level. So we really dive into loss ratios.
Yeah. And do you find, access to data, both from a carrier side who may be supporting that MGA, MGU, and obviously what the MGA, MGU have got? Do you see that as sometimes being an inhibitor to actually get? Because I suppose what I'm trying to get to is that there is always this, what you don't know, and there's a danger that there could be a loss corridor or a payback deep in sort of, certainly on long tail MGA, MGU businesses, which all of a sudden appears, maybe 2 or 3 years after the acquisition's already been done.
That's a great question. If the MGA controls their actuarial loss data, that's great. But if they're relying on the company to provide that, it can be a little tricky. Those loss reserves sometimes get a little bit arbitrary to some degree. So
Right.
we really have to dive into the historic performance there, because sometimes, as you know, insurance companies like to over reserve to limit the contingent payments or loss performance payments.
Yeah.
Not
Yeah.
saying they're doing it wrong, but we always have our questions.
Yeah, we know the card tricks. We know the card tricks. And just before I move on to my sort of next question, and again, thanks for your comments around our conference. How active do you see US companies, looking very closely at the UK landscape in terms of either increasing their already acquisitions, which they've already got in the UK, or actually new entrants? Where would you put that level of appetite in terms of on the shores of the Atlantic, as they say, looking over?
Yeah, so we focused a lot on cross border, Mike, as you know. So there's a number of U.S. firms, at least a dozen, that have a presence in London and are always looking to expand that presence by acquiring MGAs or acquiring a Lloyd's broker. Boutique Lloyd's brokers are preference for some of the smaller ones, but we're seeing also, and we're seeing Lloyd's brokers looking at U.S. We have a lot of our Lloyd's broker clients that are looking to acquire program administrators in the U.S. right now to get a beachhead or expand their beachhead here. And then what's picked up, and it's picked up quite a bit over the past months since your conference, is we're seeing EU-focused cross-border, where it's EU London or EU-US focused as well. So there's a lot of different cross-border going on, and I think it should be an interesting 12 months ahead of us for that.
Yeah, that's really interesting. So the landscape is shifting a little bit, so it's quite interesting and obviously exciting for Mystic Capital to be hopefully at the centre of that in terms of how that landscape that moves and how you can move with that landscape. So that's very encouraging.
Yeah, and that's one of the great benefits for us of being a part of the MGAA, because it gives us access, especially at that annual meeting, not only to our London clients or London prospects, but also EU prospects, and that we got a lot of activity out of that. So it was terrific.
Fantastic, fantastic. So let me move on to sort of our next theme, which is I think I read a statistic somewhere, which I think is right, that I think 50% of the world population is voting in 2024, and obviously we've had our election in the UK, and we see a lot of press in terms of the US with all the changes with Biden, with Trump, and obviously and Harris. Now, given the influence that what happens in the US can have on the UK, both from a economy perspective in terms of what happens, I'd be really interested, and I'm sure our listeners be. Do you see, and we don't want to get political, but depending on what happens in November, do you see any significant or impacts in terms of what you do, M&A activity from the US into the UK or Europe or that landscape? Just be really interested in terms of how you may see as it plays out in the US in terms of what impact that can have in other territories.
Yeah, so I'll avoid the down in the dirt politics of it, but what I focus on from a business standpoint are what are the tax proposals on it, and how will that affect the marketplace. So a couple interesting tax proposals on the Democratic side of the ticket. They're targeting higher corporate rates for U.S. companies and higher capital gains rates for individuals. Now, if those two things happen, higher corporate rates would drive U.S. businesses to move their operations offshore, or parts of their operations. So that could be a benefit to London.
Okay.
You saw some of these big corporations like Aon move their corporate headquarters to London years ago. It just
Yeah.
So I think if that were to happen, you would see an uptick in employment in London by U.S. companies, where they're moving stuff to London and having those operations offshore. On the capital gains rate side, if the capital gains rates move up, then all these small businesses, which are generally retail brokers, MGAs, program administrators, they're all small businesses. Moving capital gains rates up for those owners is going to force them to sell their business before those rates go up. So activity will go up dramatically. And we saw that back in 2013 when they were raising the capital gains rate the last time. So, 5-point increase in capital gains tax is a significant amount of money for a lot of these businesses that have built up a nice retirement package in their shares increases.
Okay.
On the Republican side, it's an interesting. There's two things they're trying to propose: eliminating taxes on tips.
Yeah.
Trump's getting a lot of headway on eliminating taxes on tips. So, and then the other thing they proposed yesterday was eliminating taxes on Social Security payments, which would drastically increase, the retirees. So that could stimulate. Those two elements would be business stimulants to the
Yeah.
economy. So that could be interesting. We'll see where that goes. Now, obviously, the U.S. has quite a big deficit, so they'll have to arm wrestle with that, how that would affect the deficit. But those two could be mighty big stimulants. So those are the things I can see from a non down in the dirts perspective. But the M&A activity would dramatically increase if capital gains rates start moving. So we've got to keep an eye on that here.
Yeah, that's fantastic insight, Kevin. It's really interesting in terms of whichever way it plays out, sort of post November. In terms of, it sounds encouraging that on either side there could be stimulation of activity, sometimes because of, and sometimes in spite of, actually. So it'll be interesting in terms of how it plays out, and I imagine all those businesses on either side of the political sort of side, will be looking very closely in terms of whether those policies do get enacted in terms of whoever's in the in the White House sort of come November. So it'll be interesting times from that perspective. And as you quite rightly point out, what happens there either way will certainly stimulate activity UK wise in terms of where opportunities may exist from that piece. So it's very, very interesting from that bit. And just a little bit of a touch on Kevin again. Obviously, from a capital perspective, and there was talk around. It's probably a little bit outside M&A, but I know you're having insight. The ability of or accessibility of alternative capital. So things such as like pension funds, banks and whatever, perhaps moving to look to provide capital to program managers and MGAs and MGUs, and obviously we're getting in the UK in particular, an increase in fronting companies, which I know is extremely well mature in the US. Do you have some sentiments, some views about how you see that sort of playing out? In terms of access to capital for carriers.
Yeah, it's somewhat of a limited field because there's certain pension funds that are comfortable with that and they are happy to get involved. But unless they've had experience in the past, it's difficult for them to just jump in and understand the marketplace. A good example, relatively decent example, is ILS in offshore Bermuda. ILS in the 2015 to 2020, there were some good performers, but a lot of the performers got mediocre returns. But now with some of the storms that have had, there's still some decent amount of ILS return opportunities that are out there. But these companies just have to get their hands around the performance risks there, because when it comes to risk bearing, you can imagine they get a little skittish.
Yeah.
Especially with retirees' funds.
Yeah. It's this concept of insurance that you have to pay claims, which is the problem, isn't it?
Right.
Okay. So again, you touched on at the start, as part of Mystic Capital's sort of service proposition, you do this sort of succession planning service for sort of the businesses you sort of partner with and those you hope to partner with. What's your sense around the general foresight of businesses on succession planning and exit? Where would you rate that foresight across the businesses both you actually have partnered with and actually those you speak to? I'd be really interested in your views on that.
Yeah, so that succession planning has really evolved quite a bit. Say I'll go just back to the 90s. It used to be fairly common for owners to sell to the key employees, and there was various mechanisms to do that. And but those prices that they sold at were much lower on a multiple of cash flow than they are today. So as those multiples started to go up, those owners who needed succession planning, the key employees just couldn't get the money, borrow the money, had the money able in order to buy them out at those higher multiples. But multiples have just gone stratospheric since then. So it's unless the principal is willing to take a haircut or finance the deal themselves, it's very difficult to do a proper succession planning without having to sell the firm outright.
Okay. And do you sense that organizations are preparing better in terms of succession or exit, or is it still sometimes across different segments a bit of a last resort? How far ahead are people doing that, or does it just creep up on them a little bit? Because certainly in the UK there's examples where some of excellent intermediary owners of businesses effectively perhaps haven't put a succession plan in place for them actually to exit the business, and it comes up a bit too quick. Is that something you see in the US and London?
Yeah, you said the key term. It creeps up on them quickly. So I think the key is numbers when you're talking about these businesses. If they have multiple partners, when they take a partner out, they should add a partner because it makes it easier. But what happens often, as you can imagine, is say you have 4 partners and one needs to retire, so they buy that partner out. Now they have 3. Now, if they do the same and only have two, it becomes a natural progression that they'll be forced to sell. But if they
Right.
keep bringing in younger talent and make them part of the ownership base, it'll enable them to do a pure succession play better. But with valuations out there like they are, greed often creeps into the formula.
Yeah. Yeah. That's good insight and good advice, actually, from that piece. That's great. So Kevin, I've come to sort of, fantastic conversation. Again, really going to be interesting for our listeners. So, uh, if we were hopefully in 12 months' time having this conversation, maybe you'll be in London and we'll be in the same room as opposed to London and New York. What would you be hope to be sharing in terms of Mystic Capital sort of successes?
Yeah, so our goal coming out of the MGA conference this year was to do at least 10 transactions in the cross-border space of London, US, EU, London, or EU, US. And so that's that still remains. We're very active right now in our pipeline with those performance plays, and I think the MGA conference was the driver for that. Really enables us to deliver that. So if in 12 months we're sit down, if I could say we've done at least 10 transactions, that'll be a good one.
Okay, that's great. Kevin Donoghue of Mystic Capital, thanks very much for your insight. Thanks very much for taking the time, and enjoy New York. Great talking
Thanks,
to you.
Mike. Enjoy the rest of your summer.
All the best. Many thanks for listening. We welcome all feedback, so please get in touch with your suggestions on topics and future guests. Please don't forget to subscribe on your chosen platform so that you don't miss out.